Example of final accounts. Following is a trial balance derived from the books of Mr. Chote Lal as on 31st March 2001. So, Chote Lal is a proprietary concern. So, your financial year is April 2000 to March 2001. Okay, so we'll see all the items in the trial balance one by one, and then we'll move on to the each and every adjustments which are given here. Okay, so let's begin. So first is the capital account. The capital of Mr. Chotelal, capital is showing a credit balance. So capital will be reflected in balance sheet liability side. Correct. Then purchases and sales both are given. So your debit balance is a purchase account. Okay. Correct. So it will be trading account debit side, and the sales will be showing credit balance. So trading account credit side. Then returns. Returns is a purchase and sales return. So your debit balance means it's a sales return. So it will be less from sales in trading account. Then this is purchase return. So it has to be reduced from purchases in the trading account. Okay. Next, opening stock raw materials. Again, it's a opening stock, so it will be trading account debit side. So trading account debit side. Then opening stock of finished goods, again it will be trading account debit side. Okay. Carriage inwards. Carriage inwards means the carriage which is carried out, the carriage expenses that are incurred for the purpose of purchase of goods. Okay, so they will be included in trading account debit side, since it has to be included in cost of goods sold. Then next one is carriage outwards. So carriage outwards is an expense which is incurred for carriage taken outside, that is for sale of goods. So it will be profit and loss account debit side. Okay, so both are expenses. Now it depends on nature of expenses. When the expense is incurred for the purchase of goods and when it is part of goods sold, then it will be in trading account debit, otherwise it will be in profit and loss account debit side. Now the next one is octroi. So octroi, we'll keep it pending, we'll discuss it later. Then duty drawbacks. Duty drawbacks also we'll explain it later. Cash assistance on purchase of raw material, even this thing we'll explain it later. Then excise duty paid, all duties, taxes, octroi, we'll discuss it later. Okay, then the next is the manufacturing wages. Okay, since it's a manufacturing wages, that is wages paid for the factory workers, it is part of cost of goods sold, so it will be trading account debit side. Okay, manufacturing expenses, again trading account debit side. Okay, sales tax paid, we'll discuss it later. All taxes, we'll discuss it later. Then office salaries, since it's a salary for the office purpose, it will be profit and loss account debit side. Office expense, again profit and loss account debit side. Selling and distribution expenses, profit and loss account debit side. Then the next is land and building. Okay, land and building is a real account, so it's an asset. Correct. So it will be balance sheet asset side. Plant and machinery, again it's asset, so balance sheet asset side. Furniture and fixtures, again it's a asset, so balance sheet asset side. Okay, then you have sundry debtors, sundry creditors. So sundry debtors will show a debit balance. Correct, that is 1345 200. So it will be a balance sheet asset side. Okay, it's a personal account showing a debit balance. Then creditors is showing a credit balance of 12,38,500. So balance sheet liability side. Okay, so this is creditors, this is debtors. Okay, then provision for doubtful debts. Provision for doubtful debts is how much? 25,200. So it has to be reduced from debtors. Correct? Then MODVAT credit receivable. Again, this is related to your excise duty, and also we will solve it later. Investments. Investments again is a personal account which is showing a debit balance here. That is 122. Investment is how much? 275, 450. So it will be balance sheet asset side. Cash at bank. Cash is an asset. So balance sheet asset side. Term loan from SBI is a personal account. It's showing a credit balance of 18,92,350. Okay, so this will be your balance sheet liability side. Cash in hand. Cash in hand is an asset again. Then bills receivable and bills payable. Now bills receivable and bills payable are again like your sundry debtors and creditors. So what happens is sometime your debtor will give you a bills receivable. Okay, that bills receivable you can use it as a check and you can encash it in the bank. Okay, so for more details on bills receivable and bills payable, you can see that particular video of bills receivable and bills payable. Okay, so bills receivable again like debtors, it will have a debit balance. Okay, so it will be balance sheet asset side. Bills payable will have a credit balance, so it will be balance sheet liability side. Then drawings. Drawings is showing a debit balance. You have to reduce it from capital. Okay, in balance sheet liability side. Okay, so this was about the trial balance. Now we will see all the adjustments one by one. First adjustment, closing inventory, raw materials rupees 3,75,500, finished goods 5,11,450. Okay, so this is closing material. Now the journal entry for the closing stock will be stock account debit to trading account. Okay, so what will be the two effects of this adjustment? One will be your stock account will show a debit balance. So this will come in, this amount will come in balance sheet asset side as a stock. And the second effect will be credit side of trading account. Okay, then purchases include MODVATable excise duty of 8,92,500. This we'll see it later. Okay, all the taxes we have kept it pending, we'll see it together. Then sales include sales tax of 5,66,200 and excise duty of 13,22,500. Again, this we'll see it later. Okay, now term loan balance includes interest of 1,72,350. Such interest is wrongly included in office expense. So what has happened is here the term loan, which is showing a balance of how much? Credit balance of 18,92,350. It includes the interest of 1,72,350. So what has happened is the entry that has been passed is office expenses account debit to term loan account. Okay, 1,72,350. 1,72,350. Okay, now actual entry should have been interest expense account debit to term loan account. Okay, this should have been a right entry which should be passed. Okay, now if you see in the wrong entry which has been passed and in the right entry which should be passed, term loan account is credited. So your term loan account is correct. So these need not be changed. Okay, in both the entry the effective term loan account is correct, but instead of debiting the expense to interest expense, it has been debited to your office expense. So now the rectified entry will be interest account debit to office expense account. Okay, So now what you're doing is interest account debit to office expense account. So what will be the effect of the adjustment? You have to add 1,72,350 to interest expense and reduce 1,72,350 from office expense. Okay, this will be the effect of the adjustments. Now the next one, bad debts during the year not recorded amounted to 16,450. Provision for bad debt is to be maintained 2.5% of data. Now here there are two adjustments if you see. Okay, bad debts during the year not recorded amounting to rupees 16,450. So we have to pass an entry for bad debts. So entry for the bad debts will be bad debts account debit 16,450 to sundry debtors account 16,450. Okay, bad debts account get debited. Now this is a nominal account, so it will be transferred to your profit and loss account debit side. Okay, sundry debtors amount is 16,450. Okay, so your debtors balance will be reduced by 16,450. Now let's see what is the balance in the debtors account. Balance in the debtors account. Okay, you can see it here, sundry debtors and creditor 1345 200. Okay, so your balance in the debtors will be, after posting this entry, it will be 1345 200 minus 16,450. So your debtors balance will be how much? 1328 750. 750. So this is first adjustment. So that first adjustment, what you have to do is, in profit and loss account debit side, you have to include bad debts, first effect, and the second effect will be balance sheet debtors. You have to reduce amount of bad debts. This will be the second effect of this adjustment. Now provision for doubtful debts is to be maintained at 2.5. So provision for doubtful debts. Okay, when you say 2.5, 2.5 of the debtors balance. Okay, now this is a first adjustment. It has two adjustments. Second one. Okay, 2.5 of what? 2.5 of your balance of debtors. So balance of the debtors has to be the net balance. Okay, so after adjusting your bad debts, what is the balance of debtor? 1328 750. So 2.5 of 1328 750. Okay, so that comes to how much? That comes to 33,219. So provision for doubtful debts has to be 33,219. Now if you see the trial balance, we had come across one entry for the provision. Okay, there was some balance in the provision. You can see it here, the provision for doubtful debt. Okay, the balance was how much? 25,200. Okay, so 25,200 was a balance. Now provision is set to be 33,219. So already 25,200 is provided for. Correct? 25,200 is already provided for in the balance sheet. So what is the difference? 8019. 8019 is the additional provision which needs to be done in the balance sheet. So what will be your entry? Your entry for this will be your provision for doubtful debts expense account debit to your provision for doubtful debts account Okay, now this provision for doubtful debt expense account is just a temporary account, okay, to pass the entry. So 8019. So this provision for doubtful debts being a nominal account, it will go to your profit and loss account debit side, and this will be added to your balance, okay, 25,200 on the trial balance liability side, okay, and then the total amount of 33,219 will be reduced from your debtors, so it will be added to here to your 25,200, correct, and then the total amount will be reduced from your debtors. So the two effects of this transaction will be P&L debit side, additional provision you have to add 8019, and the second effect will be reduce from debtors, the additional provision of 8019. Okay, so total amount that will be reduced from debtors is 25,200, which is there in your trial balance, plus 8019. Okay, now we move on to the next transaction or next adjustment. Depreciation is to be charged on land and building at 5%, plant and machinery 20%, and furniture and fixtures at 15%. Now depreciation has to be charged on land and building, plant and machinery, and furniture and fixtures. Now let's go to your trial balance. Okay, so where is it? Trial balance. You have a land and building, plant and machinery, and furnitures and fixtures. Okay, so we have to charge a depreciation on this. Now since only asset account is given, there is no provision for depreciation account here, okay, so we have to assume that all the assets are at the WDV, that is written down value, that is cost minus depreciation. All these three assets are at cost minus accumulated depreciation. Okay, so now what we have to do is we have to charge the current year depreciation. Current year depreciation entry is not passed, so the depreciation that has to be charged is 5% on land and building, that is 5% on 10,55,450, then 20% on plant and machinery, that is 20% of 15,22,500, and 15% on furniture and fitting, that is 15% of 1,75,200. Okay, so depreciation entry will be depreciation account debit to land and building account, to plant and machinery account, to furniture and fixtures account. This will be the entry. Okay, so land and building, how much depreciation will be? Depreciation will be 5% of whatever amount is given in your balance sheet. So it will be 5% of 10,55,450. That comes to 52,773. Then plant and machinery be 20% of 15,22,500. That comes to 304,500. Then furniture and fixtures will be 15% of 1,75,200. So that comes to 26,280. Okay, so total depreciation is how much? 3,83,553. So 3,83,553. So the impact of this will be, now this depreciation, it will be transferred to your profit and loss account debit side. So one effect will be profit and loss account debit side, and the second effect will be, it will be reduced from land and building, plant and machinery, and furniture and fixtures. Okay, the amount of depreciation whatever is for land and building, plant and machinery, and furniture and fixtures respectively will be reduced from all these three account in balance sheet asset side. Okay, now the next one, establishment expense of 16,000 for 19 and 2000 erroneously not recorded last year have to be recorded now. Now this was some expense of last year which has not been recorded. Okay, this has to be recorded now. Okay, so there was some expense of last year of 16,000 which has not been recorded in the last year. Okay, now it has been recorded now. Now it's not given that it is paid now. Okay, so what we are doing is whenever there are some expenses not pertaining to that particular year, we create one nominal account known as prior period adjustment. Okay, so since this is an expense, the entry will be prior period adjustment account debit 16,000. Since the expense is not yet paid, it will come to outstanding expense account 16,000. Okay, so what will be the impact of this? Since the prior period adjustment is a nominal account, it will go to your profit and loss account debit side, and outstanding expense, it's a personal account, representative personal account showing a credit balance, so it will go to balance sheet liabilities side. Okay, now we have completed all the adjustments and all the items in the trial balance except for the taxes, duty drawbacks, MODVAT excise duty. Okay, so what I'll do is I'll take all these items which are star marked in separate sheet and we'll discuss this one by one. Okay, now all this adjustment related to taxes, excise duty, octroi, we have taken it separately. We'll analyze it one by one. Now first is octroi. Octroi is showing a debit amount of 5405. Now octroi is a kind of tax which is paid at the entry of the goods. Okay, so for entering the goods, say from one state to another, octroi is paid, octroi duty is been paid. So the entry which has been passed here is octroi to cash or bank. Okay, 5405, this was the entry which was passed. That is why that octroi is showing a debit balance of 5405. Okay, now since this octroi is related to the purchases of goods, okay, it's related to your purchase of goods, it's paid at the entry of the goods, so it's related to the purchase of good, so it's an expense. Okay, nominal account. And since it is related to purchase of goods, what we are doing is we're taking it at trading account debit side. Okay, now the next is duty drawbacks. Okay, so duty drawbacks is what is the cash or the amount is credited to your bank account. Okay, it may be your customs duty or excise duty. Okay, so for duty drawback, the entry which must have been passed is cash or bank account debit to duty drawback. Okay, and amount is 1,22,400, 1,22,400. Okay, so what this duty drawback is related to the purchase of goods. Okay, so we have received some amount, okay, of duty which has been paid for the purchase of good, so it has to be reduced from purchases. Okay, since it is related to purchase of good, it has to be reduced from purchases in trading account debit side. Now why we are reducing it? Because duty drawback is showing a credit balance. Alternatively, this can be shown as a part of other income. Okay, but since it is related to purchases, to reflect a proper cost of goods sold, we are reducing it from purchases trading account. Okay, now So there is some cash assistance received on the purchase of raw material. So there was some purchase of raw material. So sometimes there are some schemes of the government wherein if you purchase some specific raw materials, then you may receive some cash assistance or a subsidy. So what will be the entry for this cash assistance or a subsidy? Bank or cash account debit 10 to 50 to cash assistance. Okay, so this is also some kind of income or additional benefit which is received on the purchase of raw materials. So since this is also related to purchase, less from purchases. Okay, on trading account debit side. Alternatively, this can also be taken as a part of other income. Okay, but since it is related to purchases, it's better to show as less from purchases from trading account debit side to reflect the proper cost of goods sold. Okay, now we will see excise duty, MODVAT, credit receivable, sales tax, and your other adjustments related to sales tax and excise duty. So what is a excise duty and sales tax? First I'll explain it to you. Say suppose you are selling, suppose you are a trader. Okay, so you are selling some goods. Okay, so original your selling price is say 100 rupees. Okay, on that government what will do is it will charge an excise duty. Okay, say excise duty of 10% on your original selling, that is 10 rupees. Okay, so now your selling price will be 110. Okay, similarly when you purchase the goods, okay, say the price was 80 rupees plus excise duty at say 10% only, so it is 8 rupees. So the price of goods has become 88 rupees total price. So what you do is, see, if you see this closely, 100 was your selling price, purchase was 80. Okay, now this 10 excise duty you have collected it from customers. Okay, now out of this 10, 8 rupees you have paid on purchase of goods already. Okay, so balance 10 minus 8, that is 2 rupees you have to pay to government. Now this 8 rupees which you have paid on purchase of goods is your excise duty credit, or you may also call it as MODVAT credit. Okay, so this excise duty and sales duty should not be part of your sales and purchases. Okay, they are as such your liabilities. Okay, what you are doing is you are collecting this 10 rupees from the customer, you are giving it to the government, but out of that, since you have already paid 8 rupees as excise duty on purchases, you will be getting a credit of 8 rupees and the net amount you have to pay to the government. Similarly for sales tax also. Okay, sales tax also, say your selling prices, say 10 rupees and say sales tax is say 10% again. This is different example we'll take, that is 1 rupee. So 11 rupee was your price. So selling price is your sales. Now this 1 rupee which you have collected as a sales tax, you have to pay it to the government. Okay, so in case of sales tax you won't have any credit like in the case of excise duty, MODVAT credit. Okay, the rules differ from country to country, state to state. Okay, so you need to see what are the rules applicable for your particular organization. Okay, now we'll see what adjustments which are given here. Okay, now first is excise duty has been paid. Okay, So the entry that must have been passed here is excise duty paid to bank account. Okay, now we won't see what is the effect of this entry, we'll see the cumulative effect of the entry. Then there is something known as MODVAT credit receivable also. So it is showing a debit balance of 1,22,500. Again, this MODVAT credit receivable is related to your excise duty. Okay, so whatever the entry which would have been passed here is MODVAT credit receivable to purchases. Okay, it has been reduced from your purchases and taken to MODVAT credit receivable, since you will be receiving a credit. Okay, now purchases include MODVATable excise duty of 8,92,500. Okay, now what has happened is purchases is still having some MODVATable excise duty of 8,92,500. Okay, so it has to be taken out from your MODVAT. It has to be taken out from your purchases account. So MODVAT credit receivable account 8,92,500 to purchases account. So this entry needs to be passed. Okay, so what will be the impact of this entry? Your MODVAT credit receivable account. Okay, add to MODVAT credit receivable 8,92,500 and reduce it from your purchases in trading account debit side 8,92,500. This will be the impact of this entry. Now the next transaction. Okay, sales include sales tax of rupees 5,66,200 and excise duty of 13,22,500. Okay, so sales tax we'll see it later. First we'll see excise duty of 13,22,500. So what has happened is your sales tax is including an excise duty of 13,22,500. Now this is not your actual sales, this is the excise duty payable. So what we'll do, we'll pass an entry as sales account debit 13,22,500 to excise duty payable 13,22,500. Okay, so this excise duty, what the impact of this will be, you have to reduce 13,22,500 from sales, and this excise duty payable will be your liability. Okay, now all excise accounts, that is duty payable plus MODVAT credit, will take it together. Okay, now what is the net impact of all this, we'll see. Okay, now here excise duty payable is 13,22,500. Okay, then MODVAT credit receivable. Okay, your MODVAT credit receivable is how much? 8,92,500 plus 1,22,500. See, 1,22,500 was already there in your balance sheet, plus you will add this 8,92,500. So your MODVAT credit receivable less MODVAT credit receivable. Okay, so how much it is? 1,22,500, which was there in trial balance, and plus 8,92,500, this was there in your adjustments. Okay, so total amount comes to 10,15,000. Okay, now your net excise duty payable comes to 13,22,500 minus 10,15,000. 1000. So that is 307,500. This is net duty which is payable. Okay, now if you see your trial balance, excise duty paid is 5,75,200. Okay, so this was payable, but your excise duty payable you have already paid 5,75,200. Okay, so you have paid excess duty of how much? 5,75,200 minus 307,500. Now this comes to 2,67,700. Okay, now this is a extra excise duty which has been paid. Okay, now this benefit you will get it in future, correct? So this is like your advance excise duty which has been paid. Now this advance excise duty paid 2,67,700 will be like your asset, because you will receive the benefit of this in the future. So it will be reflected in your balance sheet asset side. Now let's summarize the effect of excise duty. So the net impact of excise duty transactions will be, one is reduce from purchases MODVAT credit amount of rupees 8,92,000. This is the one effect. Then the next effect is reduce from sales 13,20,500. This is second effect. And then the third effect is the net of all this transaction, that is excise duty payable minus MODVAT credit. You get net amount payable less paid. So 2,67,700 is the advance excise duty paid. So these are the three effects of the excise duty transactions. Okay, from all the transactions related to the excise duty, this will be the three effects which have to be given in our final accounts. Okay, now next is sales tax paid. Okay, sales tax paid is also like a one of kind of tax which is on the selling price. Okay, so here the entry will be sales tax paid account debit to bank or cash account. Okay, this is the entry which has been passed here. Now this is an asset. Okay, this is our asset since we have paid the sales tax. Now if you go to the transaction number 3, adjustment number 3, sales include sales tax of 5,66,200. Now again, like excise duty, 5,66,200. 5,66,200 of sales tax is included in your sales, so you have to remove it from sales. So sales account debit 5,66,200 to sales tax payable 5,66,200. This will be the journal entry. So what will be the impact of this? You are debiting the sales account, so you have to reduce it from sales. Okay, and then this will be your liability, balance sheet liability, since this sales tax is payable. Okay, now again we'll do some working as we had done in the excise duty. Sales tax payable is 5,66,200, but if we look at the balance sheet, we can see that there is some sales tax which has been paid, that is 3,22,400. So less sales tax paid. Okay, how much is the amount? 3,22,400. So we have to pay how much? 5,66,200, out of which 3,22,400 is already paid. So 2,43,800 will be shown as a net sales tax payable. Okay, it will be shown as a sales tax payable net amount. Since it's a payable, balance sheet liability side. Okay, so the effect of the sales tax will be, one, you have to reduce 5,66,200 from your sales, then you have to adjust it with the sales tax paid of 3,22,400, and the net amount of sales tax payable will be shown as the balance sheet liability side. So thus we have completed all the adjustments related to excise duty, duty drawbacks or MODVAT credit and sales tax. Okay, now we'll start with the trading account. Okay.